Thank you. So this is a first panel on the subject, breaking new ground, Ethiopia's capital market evolution. There will be a panel discussion just immediately after my presentation. I'll have a few slides just to provide the context for Ethiopia's capital market. So I'm going to take you a little bit back in history. So this slide is a 60-year journey of Ethiopia's capital market over the past 60 years. In early 1960s, we had the foundations for capital market, commercial trade activities. There was a commercial code proclamation that provided this foundation. We had, as Dr. Brook earlier mentioned, there was limited capital market activity where Ethiopian companies were raising capital from the market. But that limited capital market activity didn't last long. When 1970s, when the socialist government took power, the government abolished all capital market related activities, nationalized some of private companies, both domestic and foreign companies. Then fast forward in 1990s, we had, as part of the structural adjustment program, there was a financial liberalization program that allowed the formation of private banks and insurance companies that we see today. However, whatever capital market activity, the primary trading activity was limited, so we didn't have the kind of robust capital market activity that the country needed. But in 2020s, as part of the new government, the homegrown economic reform program provided the foundation for modern capital market in Ethiopia. So here, the 2019 homegrown economic reform. In 2019, the homegrown economic reform program aimed at correcting macroeconomic imbalances in the economy, but also aimed at developing rapid and inclusive economic growth. As part of this economic reform program, financial market was considered the engine of economic growth, mobilizing domestic savings and channeling investments. So this economic reform program provided the foundations, for the establishment of the whole ecosystem of capital market. In 2021, the capital market proclamation was enacted. Immediately after the enactment of the capital market proclamation, there was a project team that worked to establish the Ethiopian Capital Market Authority. So these are the institutions, key institutions that were formed as part of the product of the economic reform program. So 2023, Ethiopian Securities Exchange was established and operational, and then 2024-25, the country's central securities depository at the National Bank of Ethiopia was established. So I've mentioned some of the key milestones of this economic reform program is basically the establishment of the Ethiopian Capital Market Authority and key institutions surrounding the capital market ecosystem. But as part of its major work, the Ethiopian Capital Market Authority has developed a robust regulatory framework, including the directives on licensing capital market service providers, and then also directives that govern the issuance and trading of securities in the market. Okay. So why do you need capital market in the first place in Ethiopia, for Ethiopia? So all these efforts over the past 5 years, the major importance of capital market in Ethiopia would be mobilizing long-term capital. The saving gap, the saving and investment gap can only finance it by a robust capital market, which would enable issuers like government and private sector to finance big infrastructure projects that we have, funding manufacturing, agro businesses, and also digital economy. The other importance of capital market for the country is a country like Ethiopia cannot rely on domestic banks. So banks can only have limited resources to fund long-term finance and large-scale finance. So capital market can provide a diversified source of funding for the economy. Another important contribution capital market would provide would be, attracting foreign portfolio investment and then also diaspora investment in the country. So I would skip some of the. So what are the, when we say capital market, we needed capital market in Ethiopia. What are the capital markets and investment opportunities that exist in Ethiopia? In terms of opportunities in the public market, there are opportunities to invest in government securities, to invest in early IPOs, and also invest in corporate bonds, coming both from SOEs and then private sector companies. In private markets, we have a large pool of SMEs that could be investable in the market, growth companies, also private equity and venture capital funds, and including blended finance opportunities exist out there. In terms of infrastructure, we have a very massive opportunity in terms of energy, in terms of airport project that was mentioned earlier, logistics, industrial parks, and digital economy are all opportunities that capital market can leverage for all stakeholders. Then what makes Ethiopia an attractive place to invest in capital market? This is a fast-growing economy, one of the fastest growing economy in Africa, with large domestic market, 130 million plus. This is a very good opportunity there. And also, the economic reform momentum in the country is also can be, considered as a backbone for investors. Also, the sectoral liberalization that we are going through, liberalization in the banking sector, telecom liberalization, logistics liberalization, these are all opportunities that provide Ethiopia as a best place to attract all these investors. However, there are risks like any market. There are risks related to FX volatility, early stage liquidity, and then also institutional capacity that we can mitigate to navigate. So in terms of outlook, Africa is one of the fastest. Ethiopia is one of the fastest economic frontiers in Africa. So in terms of outlook, the ECMA outlook, currently ECMA is working on these 4 areas: regulatory development, developing additional regulatory instruments to support market developments like collective investment schemes, directives on acquisition, offer, and others would be continuous work that we do. Also, we aim to develop an inclusive market, a market that serves all stakeholders: CIS development, Islamic capital market, municipality debt instruments, and then green instruments are also areas that we work to develop this market. Capacity, as we mentioned earlier, is an area that we continuously strive to develop, building the capacity of the ecosystem, regulators, market intermediaries, and then also the market participants as well. One of the most important flagship projects that we're currently working on is the Capital Market Master Plan. The master plan is basically a long-term framework that aims to coordinate stakeholders across the board, from National Bank of Ethiopia, Ministry of Finance, and all other stakeholders, both private and public, to provide a long-term strategy for developing the Ethiopian capital market in a very systematic and phased fashion. Sorry, I just finished my slide. Now I will be inviting distinguished guests who will be joining on this stage to discuss the capital market evolution. Guests, I will be inviting Dr. Esayas Kassa, Deputy Director General for the Ethiopian Capital Market Authority, Dr. Tilahun Kassa, the Chief Executive Officer of the Ethiopian Securities Exchange, አቶ ሚስጥረ መኮንን, Mr. Sisay, Director for Markets and Securities Depository at the National Bank of Ethiopia, and then Dr. Tewodros Makonnen, Country Manager for International Growth Center, IGC Ethiopia. Distinguished guests for joining me on this stage. This panel discussion on breaking new ground, Ethiopia's capital market evolution. So I'll be moderating this session for the next few minutes. I'll be asking the panelists some questions, and then at some stage I'll also invite audiences to send us through some of the questions. So just to set the stage, the Ethiopian capital market, Ethiopia is entering into a new phase in the journey towards developing a robust capital market. The establishment of the Ethiopian Capital Market Authority, the exchange, and the CSD has already provided the foundations, the institutional foundations, to help us move in the next phase of our development. So now in this session, we'd like to explore operational progress across the different institutions, at the regulator, at the market infrastructure, and then also the market. Also look at, to see the strategic priorities, the institutional readiness that we see in this evolving market. So I'll be asking some questions to our panels. So the first question goes to Dr. Esayas Kassa, the Deputy Director General of the ECMA. So Dr. Esayas, I just want to ask what progress the Ethiopian Capital Market Authority has made in implementing capital market proclamation, in licensing the capital market service providers, and then also preparing the market for regulated issuances and trading of listing of securities in the market. Thank you.
Thank you, Asi. I think the most important term in your question is lower progress. So I will spend some time to explain how the word progress can explain where we are and what has happened so far in the capital market ecosystem. So as progress is a function of time, process, efforts, and investments, I will use some certain framework to, rather than listing every activities and milestones throughout the process since the introduction of the concept of capital market into the Ethiopian policy discussion. I will try to use certain framework so that I will spend some time here, and I will borrow my time from my next questions because I think it's important. So when we speak about the progress of the capital market, I think we are not referring to the Ethiopian Capital Market Authority or the exchange or CSD or any single entity. We are talking about the ecosystem because capital market is an ecosystem. Progress of capital market means progress of the capital market ecosystem. So if capital market is an ecosystem, we need some criteria that help us to measure where we are. So a lot of features or predicates can tell what a system is. But for me, I will use three very important building blocks to explain what a system is, and that will help us to understand where we are as a capital market ecosystem. So the three, among the many features that can explain what a system is, I choose three important blocks, building blocks. One is component. For a phenomenon to be a system, it has to have components, different components. Components that are enough to constitute a system. So what are the important components in the Ethiopian capital market ecosystem? I will address this. And second one is integration. Different components cannot be a system unless they are integrated by different mechanisms. The third one is a purpose. A system has to be there for a purpose. I mean, a digestive system is there just to digest. Just like that, any system, either it is humanly created or it's natural, if it's a system, it has to have a purpose. So I will try to measure the Ethiopian capital market ecosystem where it is in terms of these three important building blocks. So in terms of components, I can mention regulatory frameworks. Ethiopian capital market ecosystem has, I think this time, enough regulations, starting from the capital market proclamation to the different directives, regulations, and rules enacted, formulated by the Ethiopian Capital Market Authority, rule books by the exchange and the CSD, different manuals, procedures, and others are the most important part of the regulatory framework, and the regulatory framework is one of the most important components of the ecosystem. So we have, I think, we need to refine them. We have to add more regulations in the coming time. But for the Ethiopian capital market ecosystem to work, I think we have enough regulations this time. So our regulations are there not to control behaviors, governance, or process of companies, but to support, to create and develop a fair and orderly market where the interests of investors are protected and systemic risk is reduced. So some people tend to think we have a lot of regulations and they might see them as burdens, but our regulations are there to create, develop, and help, not to control. Unfortunately, the Ethiopian in Amharic, we have a single word for control and regulation. And in the Ethiopian history, we know a lot about control than regulation. So people tend to think that our regulations are to control, but practically our regulations are creating companies, investment banks, transactional advisors, and other service providers. So in terms of regulations, we have enough regulations to start to our market. And in terms of the other component, important component is institutional components. So we need institutions so that we'll have an ecosystem. So we have the Ethiopian Capital Market Authority, we have a tribunal, administrative tribunal, we have the exchange, and the CSD, which are platform service providers. We have professional service providers like investment banks, transactional advisors, brokers and dealers, and others. So these institutions are making themselves very strong, and they are making themselves ready to function as a coordinator and orchestrated system. So the next very important element for an institution to be is technological platform. So this time we have at least three important technological platforms. One is the trading platform, as the Ethiopian Securities Exchange, which is very important and multifunction platform. We have the CSD for clearing, settlement, and registry. and we have a surveillance system at the Ethiopian Capital Market Authority. So what can I say is we have enough components for the Ethiopian capital market ecosystem to exist as a system. But for the system to work, we need to have, we need to see all these components be integrated. So integration can be between platforms, between institutions, and between the leadership of those institutions. So in terms of technological integration, you can say about interoperability, communication protocols, real-time linkage, and information flow. So there is an integration between the CSD, the trading platform, and the surveillance system. So in terms of institutions, we have procedures, rules, and regulations so that we can understand each other. In leadership, the meeting of minds and mutual understanding of purpose is the most important integrating element. So in terms of component, in terms of integration, we have enough amount of components. We have very nice integration among each other. So the capital market, what can I say is, it is already established as a system. So for the last years that you mentioned in your presentation, we have been working on creating an ecosystem. But the last one is purpose. What is the purpose of the Ethiopian capital market ecosystem? If there is no purpose, if there is no functionality, the system is meaningless. So the system, the purpose of the system is facilitating a flow of funds from the surplus unit to the deficit unit in orderly and fairly manner, where the interest of investors protected. So in that case, if we ask where we are, I can say it has just begun. So we established a system. The system must function. So this time from the demand side and from the investor side, we are working a lot. We have some products listed on the exchange. We have about 70 prospectus we are reviewing at ECMA. And from the demand side, we are working with a lot of workshops, not only the Ethiopian Capital Market Authority, but the exchange and others. So we are creating awareness in the demand side. So all in all, what can I say is progress is in a very, very important stage. We have created an ecosystem that works. So next time, I hope by next year in our third summit, our discussions will be about how the Ethiopian capital market ecosystem started impacting the macroeconomy and the financial system at all. Thank you so much.
Thank you, Dr. Esayas. Dr. Esayas highlighted three building blocks from the regulatory perspective. The components need to be there. The integration of these components, the instruments, the infrastructure that we have, and then also the purpose for this ecosystem to thrive. And then also he also highlighted some of the work that we do in terms of reviewing large number of prospectus at this stage, supporting the market in terms of capacity building as well. So I'll now move into Dr. Tilahun. He's trading the exchange operator. So in terms of the exchange, Dr. Tilahun, what is the near-term listing pipeline, and then also expected liquidity strategy to stimulate liquidity in the early stage of market development from the exchange perspective? Thank you.
Thanks, Assefa. Good to be here and good to see you all. Well, as you know, we have only 2 listed companies now, 2.5, I would say. We have 4 more coming. We have accepted applications from 4 financial institutions, which probably would announce in the next few weeks. We expect at least a dozen before mid next year, 2026. So at least before end of the Ethiopian fiscal year, we would accomplish our target of listing at least 9. In many ways, this is a good outcome, but also in all frankness, we would have liked all these listings to come a little bit earlier. In line with ECMA's, prospectus registration requirement, we kind of assumed, some financial institutions would come a little bit ahead of time. Now wait until end of November, to go through the registration requirement and etc. But it's good to hear, as we just heard from Dr. Esayas, there are more than 70 that are going through the registration process, and we expect significant majority of the financial institutions to come and list. This is on the equity side. We've had a good track record on the interbank money market, and I think that was a good sign and perhaps a showcase for the exchange in terms of what transparent, efficient markets can do to bring efficiency. I think we've traded more than 1.2 trillion birr already among banks. Just to, this number practically doesn't mean anything if we don't understand how this market operated before the exchange was launched. In our plan, we thought, barely a 100 billion birr trade among banks annually would be a big deal before the market was launched. We did not assume at all we would hit over 1 trillion birr within less than a year. The financial institutions alone made close to 3 billion birr in terms of profit from interest income. So this was a sort of a deadweight or a return that would not have been realized if efficient markets do not exist, right? So we are happy with the progress made on the interbank money market, but we want to do the same in terms of perhaps creating liquidity for the treasury bill markets, bond markets. Right now, all treasury bills that are auctioned on the CST and that are issued by Minister of Finance through the National Bank are listed on the exchange, but there is limited trading activity. I assume primarily because there is a small number of investor accounts open. There are now more than 2,000 investor accounts. I think there are more people in this room than the investor accounts that we have. So we really need to work on that. Primarily because one, by bringing the assets into the market, more number of listed companies will attract more number of investors, that's for sure. But also, all the education, capacity building, communication work that went into the market needs to translate into, a little bit more on saving culture, equity culture. I don't know how many people, if I crash your panel, you could ask how many people have actually investor accounts. So we do make time to come to these conferences, go through training. I think we have about 17,000 people that went through the ESX Academy. I'm surprised there are limited number of people that actually have made it to the broker's office to open an investor account. So, these are both of opportunities and challenges. In terms of listing, I think we also need to work on a little bit more on the debt side, especially corporate bond. There is huge demand from financial institutions, non-financial institutions. We need to work on the anchoring, primarily the institutional investor arm over there. That was an interesting discussion with Dr. Brooke and Hannah here in terms of bringing institutional investors to anchor and bring corporate debt issuances into the market. So overall, I think we're very optimistic, especially on the equity market side. We will easily, as we planned, be on par to relatively the mature exchanges in the region, but bringing liquidity, especially institutional liquidity, active participation of retail investors, and obviously promoting foreign investor is something that we all collectively need to work on in the next few months and years. Thanks.
Thank you, Dr. Tilahun. Yes, promising companies coming to the market, and then also challenging the audience, the investors to open up investment account to actively participate. But the work that they are doing in terms of, ASX Academy is excellent, and also the work especially the interbank money market, a trillion birr worth of cash has been, trading over the past months or so. Now I will move on to Mistre. He is a director at the National Bank for the CSD operation. Mistre, could you please walk us through the status of dematerialization of securities and the steps taken to onboard both investors and issuers to the CSD platform?
Thank you. Good morning, all. Thank you, Assefa, for the question. As we are aware, dematerialization is a core pillar for modern market infrastructure. Without dematerialized security, there is no listing, there is no capital market at all. So in this process, we have been engaged with more than a year. I could see, I can explain in 3 different processes that are taken in the capital market in general. Like I said, this dematerialization process is a core for the market. It should be supplemented by regulatory framework, which is workable and understandable for both the issuers and the investors. On this, both private security dematerialization directive have been issued by Capital Market Authority. Then early July, government security dematerialization also has been issued to enable the investors to dematerialize their securities and the issuers to issue electronic securities on the CSD platform. After those regulatory framework set up, we implemented world-class multi-asset infrastructure, the CSD, which both handles the private and government securities, also serves a tool for open market operation for the central bank, for liquidity management and collateral management purpose for central bank and the commercial banks. On this infrastructural setup, the CSD is built in to process the dematerialization in one by one when the investors came to the brokers. And then there is also a bulk registration upon the request of the issuer. Likely now ECMA has requested the issuers to register. After they complete their registration at the ECMA, within 5 days, they need also to dematerialize and register on the CSD. Right now, we will expect more than 70, because like Dr. Esayas said, there are institution issuers who are in pipeline for registration. After they complete that registration process at the ECMA, they will come to us for registration and dematerialization. But currently, we have early adopters. I can say 3 equity issuers are on board, dematerialized on the CSD, and the government security, any issuance plus the conversion of physical certificate from the as-is practice is being in process by the Central Security Depository Department. So in this fact, we have migrated or bulk registered shareholders up to 60,000, which is amazing for those 3 equity instrument and government securities, taking into account this. So now we expect more registration requests, more dematerialization requests from the market service providers. And then we will facilitate for listing the investors to create a securities account at the market service provider. Right now we have 3 members, capital market service provider members, who are eligible to maintain a security account on the CSD platform, so that the investors are encouraged to go to the market service provider to have that security account. Before anything, if you want to dematerialize or change your physical certificate to electronic, you need to open a security account at those market service providers with filling the proper KYC requirement in place by the regulator. Now, we need to also work on awareness creation for both the issuers and the investors. Yes, as per the capital market registration requirement, yes, we need to move to the DMAT process, DMAT world, but the stakeholders has to be clear. This DMAT process will increase the efficiency, risk, and other efficiency will be gained within this process. So we need to engage the investors and issuers. This process will enhance their management of shares, securities. So definitely we need to also teach, have a session with the relevant stakeholder to fasten, to expedite this process. But right now we have around 60,000 registered investors on our CSD. Thank you, Assefa.
Thank you, Mistre. There's a great progress at the CSD, 60,000 investors already onboarded, and then also three companies, and equities and then government securities as well, dematerialized, the physical securities being dematerialized, and the new issuances of government securities being issued electronically, which is great. So now I'll turn into Dr. Tewodros Makonnen, an economist on the stage. So Dr. Tewodros, in what ways can the emerging capital market would serve as a catalyst for, economic growth and development in Ethiopia, especially looking at the saving investment gap in the country? Thank you for that.
Thank you very much, Assefa. This is a sort of a big question that and I'll try to I'll try not to take too much time to try and respond. Of course, as a growing country, Ethiopia's investment deficit in 2018-19, we had a 10 percentage point of GDP investment gap. So our gross capital formation was about 34% of GDP, whereas our savings was about 24%, so about 10% point of GDP, which means we've had an investment deficit that was not financed by our savings. Of course, we are talking about national savings, not financial savings. Financial savings is only about 10%. To channel this saving, of course, the country needs development investment. This goes without saying. All the dignitaries were mentioning about the need for investing in infrastructure, health, education, all of that. So we'll need both public investment and private investment. We are rebalancing towards a private-led investment model, but still we need public investment to continue. But that has to be done in a sustainable way. This has been mentioned a few times. We have to move from a way where we snatch capital from whoever has it to a level playing field. And that was when the discussions about improving macroeconomic imbalances or solving macroeconomic imbalances in Ethiopia, that was one of the solutions provided, was to have a robust capital market where the government can raise capital, but in a fair way to do its much needed public investment. And this has to continue. Of course, if you look at the data of last year, both investment and savings have declined to 20% of GDP each, which means that as we were reforming, we have not been investing as much as we used to. We need to continue investment. It's important for our growth and welfare. On the private sector side, I think one of the things I want to highlight is that growth and structural transformation is continuously evolving. It's no longer the case that countries will move from agriculture to manufacturing to services. That kind of structural transformation model is no longer functioning. right? So we need to identify where we would be good in identifying export opportunities, growth opportunities, structural transformation opportunities. But this requires channeling capital to the most efficient uses. That has been missing in the country for quite a while. So we cannot afford to waste capital. We need to make sure that these are allocated to the best possible investment opportunities. And this can be filtered through the market, of course. We need the youngsters who have the investment, the ideas to compete globally. They need to get access to capital, and this has to be promoted. I know this is a big ask, and I know we are starting all of these efforts are going into that, but we need to continue to aspire to make sure that we channel capital properly to the right uses. So it's not just managing to get the savings to the investment, but we need to make sure that the systems efficiently allocate the very limited savings. But that's what we'll face eventually. Now, I see that there are, investors are not coming out. Partly it's because of awareness, partly it's because of concentration of capital in a certain way, and partly it will be because we have not been able to, to bring the limited resources into the system to unlock that opportunity. So I'll just stop there to just give a broad highlight. Thank you so much.
Thank you, Dr. Teddy. We're running out of time, but I want to still get back to you. There was insightful comments about, traditional structural transformation no longer working, so capital market can be an engine, to leverage in that space. But my question to you, next question would be, how does capital market development affects liberalization that we are going through, and then also monetary policy reinforce each other in the context of the broader macroeconomic situation?
Thank you, Assefa. I think the broader move of reforms over the past 6-7 years, I would say, have been making sure that markets function. We need to ensure that markets function on all of these components that you mentioned, moving towards an interest rate-based monetary policy, the foreign exchange liberalization, and of course, capital market. All of these measures are trying to make markets functional. So why are we trying to make markets functional is the important question. Of course, they reinforce each other very well. If you look at treasury bills, they've become an important source of funding for the government, removing repressive measures. At the same time, they are now more market-based, allowing for interest rate discovery. And Dr. Tilahun was mentioning interbank money market functioning. It's an amazing achievement that the exchange has contributed, the capital market has contributed to the flourishing of this market. This helps, of course, the monetary policy by allowing smooth liquidity management. In the past, when a bank was out of cash, it would come to the central bank and say, please lend me some money. I'm out of liquidity, right? Now, the central bank would only have to intervene when the interbank market is not sufficiently addressing liquidity issues. There are a lot of instruments that have been developed, but all of these are working together to identify the actual cost of capital in terms of interest rate, what's the appropriate interest rate, and then the foreign exchange liberalization allows the government to become more prudent in not moving back to its old habits of, non-prudent financing of any of these or direct advances. So a functioning market would allow a prudent monetary policy that also keeps foreign exchange rates stable where they are. And it has been, I would say, an impressive transition, although we see the birr, depreciating compared to other countries that have liberalized. We can say that it has been a smoother transition. So all of these, I would say, reinforce each other. And the capital market is one of the bigger players in discovering prices. Thank you.
Let me go back to Dr. Tilahun on the exchange. How does the Ethiopian Securities Exchange plan to strengthen price discovery, enhance market transparency, and then investor confidence as trading grows?
Thanks, Assefa. I think first thing first is broadly is to expand and deepen participation, right? So I was talking about retail investors. More or less you have three anchors in terms of the investor side. Retail being our predominant, and perhaps now I would say a low-hanging fruit. Soon we will launch our mobile trading application. We hope we will attract significant. I don't want to mention the plans so we don't get disappointed by next year, but very optimistic numbers in terms of retail investor. That retail participation needs to be anchored by institutional investors, and as we were discussing right now, the fact that FX reform could help the capital markets in terms of attracting foreign portfolio investment is also something to look at. So these three investor legs need to be well catered for, and that is our role. So for instance, obviously institutional investors need indices. So soon, perhaps as soon as we have 4, 5, 6 listings, we will start introducing our market indices, sharing market information, and to some extent, real-time information. This includes information and communication to foreign investors and institutional investors. Having said that, I think a bigger role needs to be played by all of us, especially the intermediaries in the room, in terms of ensuring, all these sorts of information that is disclosed to the public. Registration requirement is, primarily meant for sharing information to investors. And that information needs to be analyzed, simplified, communicated to retail investors. And I think the role of the exchange in terms of creating liquidity could only be meaningful if, based on that available information, investors can come in and exit the market as easily as possible and as profitably as possible. And I think that information, disclosure, and advisory work that we need to do, investor education that we need to do collectively actually are significant anchors. I'll add one more thing. I think from the exchange's perspective, the options in terms of investable assets needs to be there. We don't want to be predominated by financial institutions alone or equity alone. Many investors have different types of needs. So hopefully, especially as we look at the debt market, we would like to introduce a commercial papers market. We would like to introduce a real estate investment trust. That's what we were working with the support of FSD Africa and FSD Ethiopia. Primarily, instruments that are geared for Ethiopian type of investors. Bringing those into the market is our role, and I think we will see feedback from the market as well. What are investors interested in? I think Ethiopian investors prefer dividends, capital appreciation in the long run. I think more SOEs and potentially family-owned businesses could come in. But I think as we have the long-hanging fruits, financial institutions that pay dividends, and that we've seen capital appreciation. Those are the early priorities for the exchange. Thanks.
Thank you. I think because it's the first day, I think we're not able to effectively use our time. So apologies, we are not accepting questions from the audience, but there are excellent sessions in the next one, the afternoon, tomorrow, and the day after. So you will have the opportunity to ask. The audience will have the opportunity, definitely will have the opportunity to ask questions, but now, so I'm no longer accepting any questions from the audience. I'm sorry. But maybe 1 minute each, if you have anything to say for the next 12 or 24 months, 1 second, 1 minute, just one thing that you can see from the regulator, the exchange, the CSD, and then also the economists on the stage. Just 1 minute. Yeah, Dr. Esayas.
Okay, thank you so much. So in terms of progress, last year, this time, when we had our first summit, we didn't have investment banks transactional advisors. We have 2 or 3 investment advisors. There was no product registered or listed, but now we have 4 investment banks and transactional advisors, dealers, brokers. So we are introducing very important regulation directive, which is collective investment scheme. The directive is going to bring a lot of changes into the Ethiopian financial system. We are going to have new kind of companies that has never been in Ethiopia, mutual funds, ETFs, and closed-end funds and others. So I hope next in the third summit, we'll have a lot of changes. And what I can say is everybody has to contribute to the progress and development of the capital market ecosystem. Thank you so much.
Thank you, Dr. Esayas. Dr. Tilahun? Thanks, Assefa. I think, the huge demand for finance and capital, so really we have to work on our saving culture, investment culture, but we also don't want to forget that, the overall macroeconomic environment is determinant on how successful capital markets would be, right? So if businesses can thrive and can provide and give good returns for investors, we will have, investors driven towards the capital market ecosystem. And I think that should be also one of the takeaways of discussions on capital markets. And often it's said, stock exchanges are barometers of the economy. That indirectly means as long as, businesses have good returns, we can see the economy is performing well. So, a better business environment is good for capital markets. And I think we also need to emphasize on that. Thanks.
Thank you. Mistre?
Thank you, Assefa. I would like to say 2 or 3 words. Inclusive and diversified products, better awareness of capital market from investors, issuers, and collaborative environment with all stakeholders involved. So I will see in this 1 year's volume of transaction will boom. Registration requests will increase, definitely. And we have a robust product on the market side. And both demand and supply will have a better opportunity for these future years. Thank you.
Thank you very much. I would just want to say that, of course, investors need stable inflation and exchange rate, all of the macro indicators. But I think more importantly, what we need to aim is for a predictable and consistent policy. I would say a functioning and trustworthy markets. That's what we need to aim for. And clear and stable regulation, I would say, would be very important. But just in one sentence, I would say the next few months, I would expect moving from a reform kind mentality towards more enabling, administering, and proactively regulating is something that I would see in the future. Thank you so much.
Thank you. Thank you, my panelists. Please, big round of applause for the panelists.